And when you see these drawdowns, it always feels terrible. And I've been doing this since 2013, and they always never feel great. But the reality is, it's normal. So it's normal in the fact that in the last 12 months, you've probably forgotten this, but this is our 5th or 6th 20% pullback in Bitcoin. So you've dealt with this many times before. You just kind of forget it, which is weird. And I think Coinbase put out a super interesting tweet, which was, there have been 5 Bitcoin bull markets. In an average bull market, you'll have to survive the following to ride it to the top. 6, 5 to 10% drawdowns, 3, 10 to 20% drawdowns, 2, 20 to 30%, 1, 30 to 40, 1, 40 to 70. And that's all during a bull market.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In today's video, co-founder and CEO Raoul Pal gives us an important market update on what's happening in crypto markets. Is there more pain to come in this sell-off? Raoul puts it, stay calm, stick to the plan, and don't screw this up. So without wasting any time, let's dive into the video.
So what's going on now? Why is crypto so shaky? It's the same reason tech's been shaky. It's liquidity stupid. Remember, I've told everything about this everything code cycle. And those of you in Real Vision Pro Macro, and even Pro Crypto, Kevin Kelly and myself talked about it yesterday in Pro Crypto, liquidity is the big driver of all asset classes, and particularly crypto. It's the most receptive to liquidity injections or withdrawals. So I correctly managed to time the bottom in 2022 based around the liquidity cycle. And the forward-looking elements of the liquidity cycle continue well into 2025. So I don't have anything to concern over. So therefore, we're looking at the wiggles in liquidity. And those of you who follow Mike Howell, who's on Real Vision frequently, he also follows liquidity. He's probably the expert on liquidity. And he talks about the liquidity air pocket that I've looked at as well. The liquidity air pocket was happening. If you think about the US liquidity, it's driven by the Fed's balance sheet, which they've been doing QT, so they've been tightening it, making liquidity less available. But that's been offset by the Treasury, by the draining of the reverse repo. The reverse repo is an offset to what the QT was doing. And in the meantime, the other part of the equation is the Treasury General Account, which is the checkbook of the US government that Janet Yellen controls. And she's been building that. But these have meant the liquidity based back in 2022 and has been going vaguely higher. The everything code cycle taught you that there is no way of financing the debts. It's now become a word people use, fiscal dominance. This is the everything code cycle I started talking 2 years about. The everything code cycle says, well, if GDP growth is too slow, then the amount of debt in the system is too high. So you need either interest rates to come down or you need growth to go up. Now, growth is driven by demographics over time. There's not much we can do about that. You get cyclical growth, but you don't get the overall trend rate growth, which has been slowing. So the available GDP has to pay the interest on the debt. Between the government sector, that's 100% of GDP in debt, and the private sector is 120% in debt. So we've got not enough GDP to cover the interest payments. This gets really exacerbated when interest payments are high. Trend rate of GDP growth is about 1.75%, call it 2%. Whilst interest payments right now are, let's say, 2-year bonds are 5%. Okay. And then if you double that, taking into account the private sector, you've got 10% of interest payments and nominal GDP growing at whatever it is, 5. So there's not enough GDP, which is why the bond market's been freaking out.
Bitcoin's price has rebounded by more than 12.5% just 3 days after hitting a 2-month low of approximately $56,550, reaching over $64,000 on May 4. This resurgence has been chiefly fueled by the U.S. Federal Reserve's commitment to maintaining interest rates unchanged throughout 2024. Additionally, positive U.S. employment data, revealing a decline in jobless claims to their lowest since mid-February, has further bolstered Bitcoin's ongoing price recovery. Is there potential for Bitcoin to continue its upward trend, or are we anticipating another downturn? Bitcoin's potential to undergo a modest correction in May is high when it comes to price chart technicals. As of May 4, BTC was eyeing a decisive close above its 50-day exponential moving average, 50-day EMA, the red wave in the chart below, at around $63,966. Doing so could send the price toward the 0.786 Fibonacci retracement line, near the upward trend line resistance at around $69,650. Although the cryptocurrency managed to surpass the 50-day EMA on May 4, it struggled to sustain momentum for a further breakout, encountering resistance near the 0.5 Fibonacci retracement level of around $64,895. If Bitcoin fails to overcome this resistance decisively, it could start a period of consolidation or even a reversal. In that case, the next downside target appears to be around its multi-month ascending trendline support, the purple line, at around $60,500 in May. Meanwhile, a further break below the ascending trendline support risks sending BTC's price toward the 0.0 Fibonacci retracement level near $56,580 in May. Interestingly, analyst Credit Buell of Crypto anticipates the price to fall toward a similar level if it reverses from the $62,000, $64,450 resistance area.
So where are we today? Why did we have the air pocket? Well, QT was going on, so they're selling bonds. The Treasury had started building up cash reserves because tax payments have come into the system. They come out of money market funds and go into Janet Yellen's checking account, and that's taken liquidity out of the system because she hasn't spent it yet, so it's just sitting there. She's been trying to help the market by issuing short-dated bonds. That's drained the reverse repo. But now today, the markets reverse very quickly on another piece of news. The other piece of news was Jay Powell has said, hey, we don't want to sell as many bonds, quantitative tightening, which is we're going to ease liquidity conditions. Janet, on the other hand, hasn't said that she's going to issue more short-term bonds yet. Well, it's a bit impossible because the reverse repo is almost drained anyway. She's going to wait till closer to the election to unleash her checkbook and throw out money to everybody. And she will do that, and that will come in the second half of the year. So what she's done is another bit of magic. She said, well, what I'm going to do is I'm going to keep issuing these shorter-dated bonds, and I'm going to buy back some longer-dated bonds. And it's the illiquid off the run ones. But really, it's a recycling of liquidity. It's adding liquidity into the system. So Janet started to add liquidity, and Jay is making sure that he takes less liquidity out of the system. The reverse repo is almost drained. There's a bit more to go, but then it'll come down to Auntie Janet, and she will then start throwing her checks around and handing out money.
A segment of the Bitcoin market remains optimistic about the possibility of a prolonged BTC bull run in the coming months. That includes independent market analyst SHIB Knight, who anticipates BTC's price to reach $85,000 due to a prevailing bull flag setup. Another analyst, Steph Crypto, presents a six-figure Bitcoin price target, citing a so-called Relative Strength Index, RSI, breakout. Notably, as of May 4, the Bitcoin's daily RSI reading was breaking above a descending trendline resistance, akin to breakouts in January 2024 and October 2023. These RSI breakouts preceded strong bull run, including BTC's climb towards $75,000 in March 2024. The Bitcoin daily RSI just printed a new buy signal, Steph Crypto argued, adding, "This could be the start of the rally towards $100,000. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.